Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Beko and my partner Hari.
Hello.
How are you, Hari? It's been
Pretty
a while.
good. Yeah, it's been a while.
Yeah, a lot of things happen.
Yeah.
Election, coronavirus still going on. You know, it feels like eternity to me.
Yeah.
To me, it seems like it's been forever since we lived with coronavirus. It almost seems like this has always been the case.
Yeah.
You know?
It's a little bit disheartening to hear that, but hopefully this will be the it won't be much longer.
Yeah. Well, I'm glad you guys joined us today. We are going to talk about a very timely topic, which is the American election and what this means for various industries. We're going to talk about banking sector, oil and gas sector, tech, healthcare, and then more broadly, legislation, kind of issues around taxation, stimulus bill, trade issue that's been going around for a while under Trump administration. So we're going to talk about all of that in this episode. So, Hari, let's get started with our disclaimer, please.
Yeah, this is the Value Investor TV podcast. We are a podcast that helps you understand the concepts behind value investing. We are not financial advisors. We are not tax advisors. We don't know your specific financial situation, so please consult with the appropriate advisor before making investment decisions.
Excellent. All right, so we are recording, just for your record, we are recording this podcast on the 12th of November. So the 3rd of November was the election night. And of course, as you guys all know, the election results it still isn't finalized, but it's leading, it's trending towards, strongly trending towards Biden administration for the presidency, and the House is going to remain Democratic Party ruling, and then Senate is going to be a Republican majority Senate.
Most likely
That's what it's
on the
looking like
Senate.
now.
Most likely on the
most
Senate,
likely.
but it could be a split. But Republicans have locked up 50 seats, and there are 2 outstanding.
So with that in mind, I guess your first take, Hari, what was it like for you watching the election unfold and kind of the unprecedented turnout and a lot of kind of turmoil, right, in the country?
Yeah, I mean, I think the I think the pollsters should be fired. That should be number one, right? That they were pretty far off on a lot of states and a lot of general election things, and I think that's it's very hard for me to say that the country does best when we have a divided government, right? It is always in the best interest of every American that no party wields all the power, and so, if as elections go, I think it was it's very interesting to see how one party takes over and then tries to club the other one, right? That seems to be the trend that we've been going through in the last few elections. Has been a tendency to label the other group and hate on the other group and so forth, right? The founders of this country were actually fairly smart in understanding like that dynamic and kind of keeping power outside of the hands of any one group or one individual, right? The legislature is responsible for taxation. The executive branch has executes the laws of the country, and then the Supreme Court kind of makes sure that those laws are actually constitutional and so forth. So I think from a financial perspective, and from what we care about on this podcast, it's best for the country not to have giant shifts in policy, right? Because that's how businesses have to adapt and change and so forth, right? From the things that the Trump administration did, I think the 2 biggest things that they did from a financial standpoint were the Tax Cut and Jobs Act, which reduced the corporate tax rate, by from 38% to 28%. So big change, and led to a big change in the balance sheet or in the net income for a lot of companies. And then the second one was regulatory control, right? They eliminated a lot of regulation, and that allowed for a huge boost in employment in this country, and very solid GDP growth. So with the change in administration, right, we want to see how those policies change. Democrats have a tendency to have a more heavy-handed approach to regulation. And so we were talking about, before the podcast started, the various industries that this could, go through. So, assuming that the Republicans actually get the majority in the Senate, which I think is likely but not assured, it limits the Biden administration's ability to do major tax increases, but it would allow them to still do some of the regulatory stuff, because that's controlled by the executive branch. So, to me, Becco, I think this is it's going to be very interesting to see, because under Obama, I think the regulatory burden got very, very, strong, because they put a lot of regulation on a lot of different industries, and passed some laws like the Affordable Care Act that, really transformed healthcare. So, that's so I think we'll go through the industry by industry, look and see what that looks like.
Yeah, I mean, I just want to harp on one of the things that you talked about there, which is the predictability aspect of the government, right? From an investor standpoint, from corporation standpoint, one of the things that you really want is predictability, so that you can have a capital outlay, you can project out into the future which projects you're going to take on and the return on investment for those projects. You can have some predictability if there is, if there's stability in the government. And to their point about having separation of power, that's super important in terms of having a stable kind of a government that doesn't swing extreme one way or the other. So I really want to kind of harp on that point. And I think from my standpoint, I think this was an election for this. I think this was election that the American people spoke volumes about the desire to be more of a center kind of approach, instead of swinging extreme right or left. Put power on sort of the executive branch and the power into the controls of the Democrats, and then have the separation of power with the Senate and the Republicans. Again, like you said, it is still pending final countdown and whatnot. But I think to your point, people are sort of yearning for predictability, stability, and also division of sort of power, instead of having one power sort of wielding all of it. So, and to your point about Trump administration, two things you mentioned: taxation and regulation. I think those are two things that were actually quite good for the corporations and for the investment community. So, yeah, let's pivot here. I think that was a good entryway into some of the topics that we wanted to talk about in this podcast, right? So we're going to go through some of the segments, various industry segments, and talk about what this election could mean for this various sectors. Again, we're sort of speculating here, sort of taxation-wise, regulation-wise. We're just looking back at historical records of how Obama administration or Democratic-led administration have treated these sectors, have engaged these sectors philosophically. So we're going to kind of harp on that to project out into the future. But let's start off with the banking sector. Hari, so what's going to happen there? I think it's of particular interest because Obama administration went through 08-09 crisis, and obviously Joe Biden was part of that administration. What will happen there?
Yeah, so the banking sector got heavily regulated after 2008, the 2008 recession. Under the Obama administration, they added a lot of ratios and reserves that needed to be put into place before banks could consider paying dividends, paying, doing share buybacks, and that kind of thing, with the idea that the more money that they held on to, the became more stable, right? And then the thing that we've seen that's going to be different between 2008 and now is that interest rates have been extremely low, right? And so, fiscal stimulus, right? We're in a recession of sorts. That's kind of, some people are calling K-shaped and some people are calling V-shaped, right? Because depending on what state you live in, the GDP growth is affected by, the local government, right, affecting lockdowns and things like that. So the big concern here is that heavy-handed regulation, when the economy is somewhat fragile, is going to be a huge headwind. And in the banking sector, the banking sector is how people start businesses. They borrow money to invest in restaurants and things like that. And so if you put too much regulation on that, they're not going to loan money out. And then if you're not going to loan money out, you're going to end up with, underinvestment into the community. And this could have a huge impact, going forward on banking profits, on, the general health of the economy, right? So the banks are kind of a marker of the general health of the economy. So I think the future administration, Biden administration has to be very careful about that, right? Because if they come in, I think the thing that we didn't mention was that even though the Democrats control the House, their margin got squashed, and so it's actually not a solid majority that they have. There were a lot of House Democrats that were in conservative states that voted with conservatives on a lot of issues. So it's not it's not a slam dunk for the Democrats to be able to pass a lot of legislation on the left, trying to regulate banks and things like that. So if they have too much, right, they risk losing the House completely and losing the majority, or going further in the hole on the majority in the Senate, right, in the 2022 elections. So they have to be careful, and that's good for the country, I think, for them to be concerned about, and trying to play to the moderate base of the country.
Yeah. So one of the things that I just want to harp on that you mentioned, which is obviously banking sector is sort of like, it's like the leading, or sort of like the signal that a lot of people pick up on. Like the health of the banking sector is sort of a good proxy to measure the health of the economy. Yep. And financial wealth, sort of of the economy. And so, and to your point, if you are approaching banking sector with heavy-handed regulation, front approach, it might be it might be a very, very dangerous move, especially given the fact that we are sort of in a forced recession, if you will.
Right.
All right, so let's move on to oil and gas industry. Obviously, you live in the greatest state of Texas, and a lot of people are in oil and gas industry. How are people feeling about oil and gas industry under the new administration?
Well, I mean, so the last 6 months have been pretty brutal for oil and gas, right? When we lock down, there's, the demand for oil drops tremendously, right? And so it's picked up a little bit from there. So this is again, a concern for the Biden administration is where does their Environmental Protection Agency kind of fall down on some of this regulation, right? You get too heavy-handed, you end up hurting the oil and gas sector in places like Pennsylvania, where fracking is a huge part of their GDP. You can hit lots of places like Texas. Texas has, a more diverse economy now than they had, 30 years ago in the 80s when there was a big recession related to oil. So that kind of stuff is going to have a big impact in certain areas and less impact in others. But there's a kind of a reverse thing that if there's a little bit of regulation, you can actually make it less profitable to mine, to not mine, but to get oil out of the ground. And it may actually raise oil and gas prices a little bit. Now, this has the counter effect, though, of hurting GDP growth, right? Obviously, the lower oil is, the more money you have to spend on other things because you're not spending it on gas.
Yeah. One thing, like you said, kind of, what's interesting is oil and gas energy consumption is a direct proxy for economic growth. And obviously,
Yep.
coronavirus has been a major bane for the industry, right?
Right.
And I think what's also going to be interesting to watch out for is the Biden administration's push for more eco-friendly greenhouse gas emission control and things like that, and how that's going to affect out of the energy sector, right? Oil and gas is still a large portion of that, and how that's going to be impacted by sort of this push to become more green,
Yep.
right? So that's something that you would have to watch out for, especially if you're thinking about investing or have investments in the oil and gas sector, right? Just kind of watch out for that, obviously.
Yep.
All right, moving on to the next industry vertical here, big technology. Also, by the way, as a side note, I always kind of found the word tech, referring to software, mostly like software technology, kind of, I don't know, elitist or kind of misleading, because technology can be many things, right?
Yeah.
Oil and gas, there's technology in there. But anyway, that's a side note. The traditional tech, as we think of it today, like fan companies, right? Big tech. How are they going to be impacted in the light of obviously a lot of it feels like every week I see a new headline talking about another antitrust suit in some random country in Europe, or you know or even in the US, right? It seems like every month there's a hearing with the CEOs of major big tech companies, Facebook, Google, whatnot. So what do you think will happen with the big tech?
So I don't think that they're going to get as heavy-handed regulation under the Biden administration. So, it's going to be interesting to see. The one of the big things that was kind of has boosted the social media companies and and YouTube and Google has been the Section 230 of the Communications Decency Act, which is essentially allows companies that are publishing other people's content, right? So I'm sorry, it's a platform that you can post your own content on, right? So think about websites that have forums, Facebook, Google comment sections, things like that. That has been a kind of a target for the conservative groups, and because they have felt that big tech has kind of targeted and censored some of their content, right? So if you look at President Trump has tweets that are being flagged for misinformation or things like that. So one of the things that was he was focused on was that Section 230 being modified to say if you're a publisher or if you're censoring somebody's content, it has to follow be consistently applied. If it fails to be consistently applied, then you become no longer a platform, you're a publisher, right? So under a Biden administration, I don't see that really changing much. I mean, I think Facebook, Google are going to have a fairly easy time with this kind of regulation. I think they've been heavy lobbyists with the Democrats in the past, and so I don't see much that is going to affect them with this. Now, I've heard some Democrat senators and so forth say that they want to kind of regulate them because of their size and things like that. I think it's going to be hard to prove in court that Google has been harming people, with their monopoly, right? So part of the monopoly clause is that your monopoly has to cause problems, for your consumers, right? And if something is free, how does that hurt you, right?
Yeah. Just to point out the difference there, you're talking about now the monopoly clause, whereas you were originally, or I guess before you were talking about the monopoly side of it, you were talking about the publisher
Yes.
rules
Sorry.
around
Yes.
censoring and whatnot. So just want to point out the two different issues at play here.
Right. So there's two sections of this, right? That big tech has to worry about, right? One is the publisher versus platform conversation, and the other is because of their size, Facebook, Google have a disproportionate percentage of the ad revenue space, right? And so they're able to dictate advertising rates and things like that. So I don't know that those things are going to be changing too much. Under this kind of administration, we are seeing that we don't know who all will be in the cabinet positions yet, but a lot of big tech executives are front runners for some of those jobs. So we'll have to see how that goes.
Yeah. I think another interesting point, so those two threads right there, I think is going to be very important to follow if you're investing in big tech. I think another thread that's going to be quite interesting to follow is we're going to talk about this later more in detail, but it is, as it relates to technology sector, the high tech, that's the silicon chip industry, the jostling between U.S. and China for the tech supremacy. I think that's going to be also interesting to watch. And of course, we talked about TikTok and kind of Trump administration trying to rein in some of the wildly successful apps like TikTok that originated from China. I think that's also going to be part of that thread. Anyway, we'll talk about that more in detail later. Now let's lastly move on to healthcare. As soon as Biden got elected, I think there was a lot of conversation about healthcare, what this means, and what this means for Affordable Care Act. You as a physician probably have more personal interpretation of what this would mean for American people. But also as an investor. So what do you think will happen here with the healthcare industry?
So one discussion point, even before we talk about Biden, was that the Affordable Care Act was brought up to the Supreme Court this week for review to see if because they removed the individual mandate, would that invalidate the law? And it's looking like that the answer to that question is no, that they're going to probably keep the law as it is. So, I think there's kind of the left wing of the Democrat Party that wants to do Medicare for all. That kind of legislation would require I think it would require the Senate to be under the control of the Democrats, right? And so I think, the parties are going to have to come together to make more of just modifications to the Affordable Care Act than say, completely eliminate it and get into, the more healthcare or Medicare for all socialized medicine, kind of, setup. So I think it's much more likely that we're going to see tweaks to the healthcare laws rather than big overhaul changes. Now, if 2022 Democrats control the Senate, there may be changes there. But I think if you look at the Affordable Care Act itself, it was passed essentially without any Republican support. And at the time, Democrats controlled, 60 members of the Senate and had a majority in the House. So, so big changes to healthcare, I think, are going to require overwhelming support, because Republicans, I think, are going to be opposed to them.
Mm-hmm. Yeah. Since you and I are both in the healthcare industry, right, during our day job, I think this is something that's going to be really interesting to watch out for. Obviously, I think under Trump administration there was a lot of good things that happened actually. Right,
Yep.
price transparency, for example, is a big one. Right,
Right.
there's an executive order to reveal. If you guys are listening from outside of the U.S., there's a huge problem in the U.S. of not having transparency in terms of price. So if you walk into a hospital and want to, are looking to get knee surgery, for example, uh, you just have no idea how much it will cost you. So there were some really good things in the works, and so we'll see how that will pan out under a new administration. Okay, now let's shift gears here and talk about the lockdown. COVID-19. Obviously, you talked about some of the stuff earlier on in the podcast, sort of the local nature of how um, the lockdown has been executed, right? And and so what would that mean under Biden administration, and also as it relates to that the stimulus package? Let's talk about both together.
Yeah. So I think the lockdown part of it is going to be impossible to enforce from a federal level, right? And so, I think the Biden approach would be to have at the state level have each state impose their own sort of lockdown. So I think that's not going to go anywhere, frankly, in terms of, Republican governors are not going to allow that. And, so I think it's going to be a much more difficult proposition for them to push any more lockdown. Now, that means, though, that we're still going to probably continue with the K-shaped recovery that we talked about earlier, which is states that are open are going to have economies that are functional, right? Florida is basically fully open. Texas is mostly open. There are few restrictions. And then you go to places like, Michigan. I think Michigan today announced, new lockdowns with basically complete shutdown. You live in California, and you were telling me before the podcast how California is slowly opening, but really it's still pretty locked down. So I think you're going to see some real problems there, right? And so the big concern there is how is this going to affect their budgets, right? State budgets are going to still, they're going to have huge shortfalls in revenue. And this is where that stimulus is going to come in to play, right? Are they going to be able to put money into the hands of people who live in, working class people in California to keep them afloat? And we're already seeing that in, the original stimulus, there's a lot of fraud associated with it, right? Lots of people were getting money that shouldn't have gotten money. And then people who desperately need it didn't get any, right? And so, that's a big concern about this, is that you're going to see the people who are politically savvy can finagle their way into the law and get more money out of it, and so you're going to see a kind of a split recovery, I think, in a lot of ways.
Yeah, I was talking about this very, very issue of kind of the split recovery aspect you're talking about there, and how it's really the income inequality and the gap that we're seeing is only accelerating, and has only accelerated during COVID. And to your point about having access to financial, capital through banking system or through government loans and stuff like that is really only available for people who are well connected, and for those that are not, they're getting the short end of the stick there. Okay. And lastly, let's just quickly talk about the trade war, and I think that will bring us to the end of the podcast. So, trade issue. We briefly talked about it as it relates to tech. And you know, we'll talk more about like country specific details in the second podcast, the next podcast. But overall trade, what is it going to look like under a Biden administration?
Well, I mean, if they are reversing the policies that Trump was putting in place, I think you're going to see more of a tendency towards the globalization side of the house, and less of the America first kind of mentality, right? So, there are going to be more push for moving jobs out, more immigration of, skilled workers and things like that. So, but it's hard for me to really, put my finger on what that'll look like, because, these countries kind of have, there's countries that were favored by Republicans and disfavored by Democrats, and some of those will flip, right? When you have a different political group in power. And so, the trade policies of, Obama and Bush were very similar to each other in that they were all much more globalist, right? Trump has kind of been the unique one here in that he has been far more protectionist or nationalist, would be another word for it. And that creates some good things and some bad things, and globalism creates some good things and some bad things, right? So I think, rather than try and get into too much of the detail, because I think we have the entire next podcast is going to be focused on countries, right? I think I'll just leave it there, right? That trade policy is going to be interesting.
Yeah. Yeah, especially as relates to China. I think that's going to be a big topic of discussion in the next podcast. But all right. Thank you guys for joining this podcast. I hope you guys enjoyed it. And I hope you guys tune in for the second part of this series. All right. Thank you guys.
Thanks.